So I'm going to hand over a couple of questions, and I'm going to start with you, Theresa, if that's okay.
Thank you. Sure.
Theresa, in your view, investment climates daily around the world, you obviously assess a lot of investment climates around the world, and you've actually allocated investments into Africa. Tell us what influenced that decision, and to what extent are cities, as opposed to countries, becoming an important consideration for you to select in your investment choices?
Great, thank you. First, a little bit of context on the Washington State Investment Board. First, we're Washington State, not Washington, D.C. We're on the other coast. Most people get us confused with Washington, D.C. One of the things, we're about a $115 billion fund, not only retirement assets, but insurance assets for the state. We're probably most known for being early to global markets, early to emerging markets, and have a very large allocation to private assets. So we have 23% of our portfolios in private equity, 15% in direct real estate, another 5% in tangible assets. So our total alternatives allocation is 43%, which is very unusual even in the United States, and particularly, I imagine, unusual here for pension funds here. I want to talk a little bit about why we're comfortable being a global investor, what led to our decision to do that. For one thing, where Washington State is located, we're on the Pacific Rim, and we have always, as a state, had huge trade partners globally. So Washington's economy is very, very dependent on international trade. So in general, our trustees, our government, our beneficiaries are comfortable with being a global player, and so that has played into comfort with a global asset allocation. We began eliminating our home country bias probably 15 years ago. We adopted a global benchmark. Of course, the easiest place to very quickly reduce a home country bias is in public equities, so that's where we started. Public equities are now about 55% North America. The rest of it is rest of world. But that decision then made us start taking a look at our private assets portfolio. It takes longer to build a global presence in private assets, but we started being very disciplined about that probably a good 10, 12 years ago, where we essentially create model portfolios for each of our asset types, and we talk about where we want to be 20 years from now, not where we're currently at. And I think one of the things that, obviously the demographics of emerging markets are hugely attractive to us. And as a long-term investor, we don't look at emerging markets as just an additional way to increase alpha. We look at emerging markets as the markets that are going to be the developed markets in 20, 30 years from now. And if we don't get in on the ground floor in terms of understanding, building partnerships, we'll miss out on those opportunities going forward. So for us, it is about risk diversification, it's about geographic diversification, but it's really about getting understanding and building relationships that are going to sustain us for our long horizon investing platform. Our approach to emerging markets, and then I'll get specifically to Africa, I think there's kind of two things that would distinguish how we approach this. One is we look for deep, direct relationships with intermediaries. I have about 100 staff total, about 60 of them are investment staff. And yet we're in 75 countries, 49 currencies, 14,000 different holdings. We can't do this without on-the-ground partnerships in the economies in which we're investing. So we spend a lot of time vetting potential partners, getting to know people on the ground, building peer relationships with other funds, with other institutional investors who can vet local partners for us. That's one thing we focus on. The other is this commitment to alternative assets, frankly, is an advantage in emerging markets. And the example I always like to use is China. We do not like the public equity markets in China, and we don't play in them except in a very nominal way. But we really do like private equity and real estate investing in China. And so that's a very interesting, important emerging market for us. The fact that we're comfortable with alternatives and have expertise in it has allowed that market to open up for us. I think it's very similar here in Africa. The public markets in South Africa, obviously very well developed, but they're not very liquid in other countries. The fact that we have a commitment to private assets and are comfortable with investing in that has opened up Africa to us in a way that maybe would not be open to us. In particular, particular, how does Africa fit into our equation? You know, for us, it's very early days. One of my investment officers, Reggie Ross, who's at the back of the room, he's been coming here for a number of years and heads our real estate efforts here. What he says is we have to approach this market with humility. We're new, we don't know a lot, we have to rely on people who are here to teach us, to help us find the right opportunities, and so we're going very slow and very cautious. But when you think about half the world's young population lives on the continent, we have to be here. This is a really important future market for us. The other thing that we really, and the question on cities versus countries, one of the things that's really obvious to our real estate team is you can have a really difficult geopolitical environment at a federal level, but you may have a local municipality that's run very well, and it seems to me that Durban is an example of that. So, you know, in the US, national politics are a mess, but you have cities that are still very strong. I think probably the same could be said here. So we're looking for those sort of microclimates, those opportunities within a region that are healthy and supportive of the kind of investing we're interested in doing. So for us, it's all about understanding the local economy and the dynamics of that local economy, and then finding partners within that local economy that can implement for us. And with that, in essence of time, I'll turn it back to you and our next colleague.
Thank you very much.
Doing business in Africa. You can't afford to be without Africa Investor.